I'm Charlotte McLeod with the Investing News Network, and here today with me is Koby Kushner, mining analyst at Red Cloud Securities. Thank you so much for joining me. Great to see you.
Thanks for having me, Charlotte.
Really nice to have you here. And our conversation today is going to be about lithium, which we know can be a little bit of a complex market. I want to start off by just getting your sense of where we're at in the cycle right now.
Yeah, that's a good question because a lot of people, have seen prices explode. They've since cooled down about 30% from its peak. But overall, I think we're still in the early days. People think, oh, well, we're at the top, we're now coming down. I don't think on such short-term time horizons. I think on, 10-year time horizons. So, if you look at supply and demand, it's very evident that generally demand is growing faster than supply. The fundamental issue is that we have been investing at the wrong side of the market. So, we started off wanting EVs, and then it's like, oh, well, now we need batteries, now we need lithium chemicals, and then the resource came very last. And the issue is that it takes a lot longer to bring on a new mine than it does to bring on new battery capacity. So the supply-demand, as a result of it, the supply-demand curves are projected to just keep widening and widening, and things are going to get pretty bad by the 2030s. The simplest way to, I think, describe the problem is by looking at Benchmark Mineral Intelligence's forecast. They're calling for 74 average new lithium mines to be needed to meet 2035 demand.
74.
Yep.
It's a lot of lithium mines. So let's look a little bit more closely at supply, because as you mentioned, the general consensus is that it's really tight supply-demand dynamics. Demand is going to go up. Supply, we can't meet it. There are some bearish forecasts out there as well. I know Goldman Sachs periodically tells us those kinds of things. So supply, from your perspective, anything more you would add?
I'll just say ignore Goldman Sachs completely.
All right.
So they're calling for, they were calling for a price correction at the same time that they're calling for a deficit to widen. So I don't understand how you can have a widening deficit and then having prices go down. I'm not saying it's impossible, just unlikely. And then they're talking about lepidolite supply, and the issue with lepidolite is that it's going to cost a lot more to get your lithium out of it. So I can go on and on, but the point I'm making is that if you want to call for prices to go back to the cost curve, that's fine. But if you're assuming that this new supply is going to be from lepidolite sources and other more expensive sources, then the cost curve is going to go up. So if prices come back to the cost curve, because right now we're very disconnected from it, if they come back to it, we're still talking about elevated lithium prices because the cost curve is now higher.
And let's talk a little bit more about prices, because this is another place where the lithium industry gets a little bit complex. There's no one single price, different products. So what should investors know about that, just briefly?
Yeah, you're right. So lithium is not yet a commodity. Gold is gold no matter where you sell it. You get the same price around the world generally. Lithium, it depends. There's different grades of your lithium chemicals. So whether that's hydroxide or carbonate, they'll fetch different prices. But also within that, you can have battery grade product, you can have technical grade product, you can have different purity levels. Depending where you're selling it, you'll fetch different prices. So it's generally they all seem to move together, but not always. Spodumene prices, for example, spodumene con prices didn't see the rapid dip that we saw with chemical prices recently, but generally they all move together.
And as an investor, how can you go about navigating all of these different levels of prices to different products? How can you sort out, especially when you're looking at companies and trying to figure out what is a good investment? What can you know there?
My advice would be let's not use spot prices right now. Let's pick a long-term price above historic highs, but just keep a simple price assumption and treat your investments as if lithium is a lot lower in price than it is in reality, and consider the rest to be gravy. If you're trying to pick winners, go for things that work at prices that are half of what they are today.
Okay, we'll come back to more tips on investing in the companies, but before we do that, I want to also ask you about the demand side. So of course, when it comes to lithium, we know that electric vehicles are hugely important. That's the main driver. So, and we also know that the green energy transition is driving that demand, this shift toward more electric vehicles, other things. So that is all great. However, we also have things going on like recession concerns, inflation, which is making it so that people might not want to buy an electric car. And I'm wondering how you see that playing out, because of course, as you mentioned, you take a long-term view. How do these things come together?
Well, how long does our average recession last? And then how long is what could be essentially a new industrial revolution last, right? The latter comes a lot longer. So that's why I don't pay attention as much to short-term things like recessions, which generally they're short-term. The fact of the matter is, I don't see lithium demand going away. I don't see lithium ever getting engineered out of batteries. It's the lightest metal on the periodic table, right? It's got that superior energy density. You can't replace that. So it makes it perfect for anything mobile. If you ask anyone listening to this interview, and if you have kids, you should ask them what kind of car they want to drive when they're older, because I'd be shocked if that many people still wanted a combustion engine.
Yeah, they want a Tesla, right?
Exactly.
Yeah.
And governments are starting to mandate it, right? And I don't think they're realistic in their goals, but the fact that we're now having government push for it just puts more wind on lithium's back.
All right, and on the note of demand, so we're increasingly seeing car makers such as Tesla doing deals with lithium companies, and they're moving even further down the supply chain at the moment, not necessarily a mine that's in production, but with juniors that are not producing yet. So I wonder if that is a strategy for investors to look at maybe a company that is going to do a deal with an automaker, and how can you identify opportunities like that?
That's a great question, and I think it does point out to the desperation that automakers are having. They recognize that they need lithium. How can they secure it? So they're going all the way down the supply chain, and I don't know if there's specifically a trade that investors can make to benefit from it. I think at the end of the day, you got to look at the assets that you think are most likely to be producing one day. The offtakes will come one way or the other. Keep in mind, a lot of the companies putting out these agreements with battery makers and automakers, some of those are just non-binding MOUs. Other companies have plenty of them and they just don't talk about it, right? Because in their eyes, maybe it's meaningless. It is a nice promotional item, though. It is a nice promotional piece to have. If you announce that you've signed an offtake with a non-binding MOU with Tesla, I'm sure I'd be surprised if your stock price didn't go up the next day.
No, but you're right, though. Those can be tricky, and investors might end up being disappointed in the end if that doesn't pan out.
Mm-hmm.
Okay, another point I want to go back to just briefly is you were talking about how we've gone a little bit at the wrong end of this. So we decided we want electric vehicles and we forgot, all right, we need to have the raw materials. So the other element of that is the battery factories that are being built around the world and also trying to catch up with the processing side of things. So any comments on that you would share?
I think the same thing holds true, right? Like that's in the middle of the supply chain, right? The gigafactories, and so we've seen investment in the gigafactories, plenty of it, but we're still lacking that investment further upstream. So the gigafactories will be scrambling to get feed.
Exactly. Okay, and I want to ask, of course, where you see the most opportunity right now among the lithium stocks. We could talk about specific companies. We could talk about what you look for in a company, anything like that.
Sure. There's two big opportunities that I see, and before I do this, I do want to briefly touch on the demand, if that's okay.
Of course.
Because it plays into what I'm about to talk about.
Yes.
So, lithium historically, is mostly industrial purposes, like glass and ceramics, that was driving its demand. The first lithium-ion battery wasn't commercialized till 1991. 2018 was the first year that battery demand actually overtook industrial demand. And 2021 was the first year that EV demand EV battery demand overtook demand for all other, for everything else, right? So what I'm getting at is that lithium is new. Prior to it being a battery metal, lithium was mostly produced as a byproduct. We didn't need to explore for it, right? The Atacama, they were producing potassium, and they also had lithium in their brines. Green bushes, that was originally tin, and then tantalum, and lithium, again, was a byproduct. What I'm getting at is that we didn't deliberately explore for lithium, and now we need to put dollars into grassroots lithium exploration. So that's one opportunity that I see, because we don't actually know how hard lithium deposits are to find, because we genuinely haven't done much of it before. We've only very recently started. So I think there's going to be plenty of discoveries to be made over the next couple of years as we're finally seeing exploration dollars go into grassroots exploration. Just keep in mind a lot of the pegmatites, that's where the hard rock lithium, that's the source of hard rock lithium, right? These pegmatites. A lot of the pegmatites being drilled today were historically mapped from years ago, and it was found by accident. Patriot Battery Metals and their Corvette project, I would argue it wasn't a genuine discovery. The team's done an excellent job. They were the first to drill it off, but those pegmatites were historically documented back when Virginia Gold Mines was exploring the property. It was a gold project before, right? A geologist was probably eating his lunch on the pegmatite and noted some spodumene and wrote it down, and at the time no one cared. So imagine if everything being drilled today was mostly found by accident. Like, imagine the opportunity out there if we deliberately searched for lithium. The other thing where I see the opportunity here, and really I'm trying to find ways that something that'll throw a wrench into this supply and demand problem. We need another source of lithium that hasn't been done before, at least on a commercial scale. So that could be the clays, lithium clays. We haven't seen that commercialized yet, but finally, for the first time ever, things are getting funded. And then the other thing would be DLE, direct lithium extraction. So that's getting lithium out of brines without the need for evaporation. And there's plenty of ways to do it. It's not a one-size-fits-all solution, but I think that there's a serious opportunity in DLE. And the reason is this. Your limiting factor is your deliverability. Like, what kind of flow rates can you get out of your wells? So if you're a hard rock company and you want to scale up production, you're generally limited by the geometry of your ore body. If you're an evaporation brine company, you're limited by your evaporation rates, your pond footprint size. You have to be in a desert. With DLE, scaling up production could be a function of just drilling more wells. So that's why I think it's so disruptive. It needs more work to do. In terms of my kind of top picks in both exploration for hard rock as well as DLE companies, I really like Grounded Lithium. So that's a DLE brine developer out in Saskatchewan. They've got, I believe it's 3.7 million tons of LCE resources at their Kindersley brine project. I really like that one because of the team driving it. So it's an oil and gas team. And if you're looking at DLE, I tend to flock towards management teams that are more oil and gas oriented because they understand fluid flow. The mining teams tend to focus on grade, but when it comes to this stuff, actually deliverability matters a lot more than grade. And then for hard rock, I'm really liking Latin Resources. That's an Aussie-listed company. I was just at site there a couple weeks back and was very impressed. They've got 13.3 million tons at 1.2% lithia. I think they're really going to grow this thing. There's a lot of serious exploration potential here.
Okay. Well, thank you for sharing those and also for adding the context. I think that helps people understand why you like them. As we're wrapping up, what final thought would you leave investors about lithium if you had to distill it into one thing?
Those who think that they missed the market, you haven't missed anything. I think things are just getting started.
Okay, I think that's a great note to end on. Thank you so much for coming by to talk about what's going on in the lithium market. Really exciting.
Thanks, Charlotte. It's been a pleasure.
Thanks. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Koby Kushner with Red Cloud Securities.